What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about Walt Disney, ticker symbol DIS. They are going to be reporting earnings tomorrow after the markets close. So I wanted to do a video, go over their first quarter fiscal year 2023 numbers, talk a little bit about the intrinsic value calculation, and of course, go over the technical analysis on this stock as well. So if you enjoyed this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts and all the trade ideas and options alerts as well, and as well as the private live streams that we're doing Monday, Wednesday, Friday. There is a 16% annual discount available till the end of this month, so you can take advantage of that and of course get access to all the benefits. So link's going to be down below. So when it comes to Disney, this right here were the numbers from the first quarter of fiscal year 2023. So they are on a different fiscal year than compared to most companies. And revenue was up about 8% on a year-over-year basis to $23.5 billion. Operating income was also up about 5% to $1.7 billion. And then diluted EPS, earnings per share, were up about 11% to 70 cents per share. Free cash flow was substantially down because of the again, the streaming business and of course the capital intensive business that the company really has. So negative free cash flows of $2.1 billion and down 81% on a year-over-year basis. Now, when it comes to their actual core audience and talking a little bit more about streaming, because Disney really has turned into a streaming giant now, it's got a ton of subscribers, very much comparable to that of Netflix. We're looking at 104 million subscribers in the first quarter 2023. That was an increase of about 20% on a year-over-year basis and about 1.4% on a quarter-over-quarter basis. Disney for Hotstar was about 57.5 million. Now this right here was a bit of a decline. So we did see a decline of quarter-over-quarter coming down from 61.3 million to 57.5 million subscribers, and year-over-year increasing by about 11% for the company. So that is still a pretty strong growth here for the business. And I do apologize for the background noise because there is some construction going on apparently from my neighbors upstairs, and they are super annoying, so I do apologize for that. But the point is that Disney Core did grow, but Hotstar did decline on a quarter-over-quarter basis. Now, when it comes to Hulu, very stagnant, very stable. You'll notice 48 million subscribers total, and ESPN also increased to almost 25 million subscribers here. And this right here is going to be the revenues generated from their parks, experiences, and product revenues. So again, as we are coming at the end of the pandemic and we are now coming out of it, we have seen a significant increase for, again, international parks and experiences, domestic parks and experiences. The revenue that's being generated from these Disney parks and entertainment parks and experiences is once again on the uptrend here, up 21% year over year for revenues, and operating income also up about 25% on a year-over-year basis. Now, when it comes to the average monthly revenue per paid subscriber, unfortunately, what we're seeing with Disney is a little bit of a lower number. So $5.95, again, it's very, very low compared to that of Netflix. In the US and Canada, that's down 2% from same time last year. Or actually, in fact, last quarter, it is down 2% quarter over quarter. And what we're seeing here, international, excluding Disney Hotstar, 562, down 4% quarter over quarter, and Disney Core at 577, down 3% quarter over quarter. So that's not great, because what we want to see is both the subscribers grow and the average revenue per subscriber also increase. But right now what we're seeing is subscribers are growing except for Hotstar, and average revenue per subscriber is declining on a quarter over quarter basis. Now, there can be some seasonal factors to it. There can be some other cyclical factors that are affecting Disney's average revenue per subscriber, but we're also looking at a quarter ending in December, right? I mean, that's usually the holiday season, so you want to have that a very, very strong number. But unfortunately for Disney, we're seeing a bit of a decline there. Now, when it comes to, again, the revenue generated through parks and domestic experiences, international experiences, very strong growth, 27% growth, 36% growth in operating income. And this right here is going to be that overall number where both the revenue, the operating income, gross profit, and the net income also growing, with diluted earnings per share also up to 70 cents per share, up from 60 cents same time last year. And again, I do apologize for the construction that's happening in the background. Hopefully the microphone is not picking that up. So again, hopefully I really hope that it's not picking up the construction in the background. This right here is the overall revenue trajectory. You'll notice that the company has done really well in growing the overall revenue, going from 45 million to over 82 million dollars in revenue, and gross profit has also gone from 20 billion to over 28 billion dollars in gross profitability. Now, the one thing that has struggled is, of course, the operating income because of COVID. We did see a substantial decline in operating profitability, and now we're starting to see that trend move in the right direction once again post-pandemic. Now, when it comes to EBITDA, same story as operating income. Diluted share count has been pretty stagnant at around 1.8, 1.9 billion shares. It was going down, but now it's starting to go back up again to 1.8 billion. And again, diluted earnings per share were positive very nicely. And we saw that COVID sell off and they turned negative. And now we're moving in the right direction once again. And this right here is going to be the expectations from analysts, expecting $4.11 in EPS, all the way to over $9 to as much as $10 per share in EPS from the company. Now, the balance sheet is not the best. When it comes to Disney, they do have more debt than cash on the balance sheet. So if you come over to statistics here, you'll notice that their balance sheet items, they've got a net debt of 39, almost $40 billion. So that's one of the reasons why Disney, for me personally, has never been very attractive, because they are sitting on over $48 billion worth of debt and only $10, $11 billion worth of cash. So that's never been sort of like a great balance sheet for me. But going over to the intrinsic value, the growth rate expected from analysts is 17% over the next 5 years, right? 17% is going to be from 2023 to 2028 is what analysts are pricing in. So if we account for a very optimistic $7 billion of net income for 2023, because that's really what the analysts are pricing in, based on the share count, they're expecting about a $4.11. It's actually going to be a little bit higher, 7,500. There we go, $4.11. It's going to be $7.5 billion in net income. I don't know if Disney can actually do that. Maybe they can. We'll find out, of course, eventually. But even if we go with, let's say, a 14% growth rate for the company with a 20 times PE multiple, and of course a 12% discount rate, a 10% margin of safety, and literally no share dilution, we come down to a fair value of about $80 a share, which is very much in line with where we estimated the fair value to be few months ago when I did an analysis on Disney as well. So this right here is going to be that sensitivity grid. And again, you can see for yourself how the fair value changes depending on different price multiples and depending on different growth rates as well. But for me, I think $80 is going to be a far better price for Disney, and that's going to be in line with this green rectangle as we have identified as an area of support for this company. So this right here is going to be that level to watch as a support for the stock, very much in line with this area of support, and of course the fair value at $80, and of course we've got this lower high for this company as well. But the concerning part for me also is the balance sheet. I have no problem with the valuation, because right now you can see that on a forward basis we are trading at just under 20, and over time it's gonna somewhere be around 20 times earnings, depending on the earnings growth is very strong. But the main concerning part is the balance sheet for the business. So let me know your thoughts down in the comment section below. Right now Disney at just over $103, and we've just been consolidating sideways, and this right here is going to be a big resistance and a lower high for this company. But for me, the fair value is going to stay put at roughly around $80 a share. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas, and all the private live streams as well. There is a 16% discount for a limited time and with limited spots, so link's going to be down below. As always, happy investing. I'll see you all in the next video.